Welcome back to the Wealth Fact. This week, I'm sharing a weekly recap of last week's news, and sometimes it might be older if I find something interesting that I want to share. So we're sharing news from last week of February 16th through the 20th, and probably some older stuff. But anyways, let's get into it. If you are planning to upgrade your PC or grab some cheap SD cards to upgrade your Switch or camera gear, you're probably gonna end up crying at checkout. We're entering a storage shortage. Even Western Digital just dropped a bombshell during their last earning call that they sold out. The CEO confirmed that the company had committed its entire production capacity for 2026 to the top 7 enterprise customers, and the regular consumer like me and you didn't make the list. And it's not just Western Digital. Micron is pivoting away from consumers. It's pivoting to hit that AI boom. And the ripple effect is hurting everyone from PC builders to phone manufacturers. And it's about to get over 300% more expensive to start buying these memory chips. So why can't you just buy a hard drive like you used to back in the day? Pretty simple. For every problem solution that's going on right now, it's AI. It's swallowing up the entire supply chain of chips. In 2026, data centers didn't just start buying up chips. They started chugging the entire supply that was out there. Western Digital revealed that 89% of their revenue now comes from cloud businesses. And regular customers like me and you make up about 5% of their entire revenue. Because AI training models require massive amounts of data. This is leading large companies start buying up all the available storage out there, even before it's produced, because they basically have a huge pre-order for the next 2 years on global supply. And we're going to start seeing these insane prices. Like, remember when a 2 terabyte SSD storage was around $100 purchase? We could be seeing that 2 to 3 times its price now. TrendForce revealed that in the Q1 of 2026, it's become a nightmare. They're now expecting DRAM prices to jump by 90 to 95% in the first quarter alone. And NAND flash, the one that's in the SSD, is expected to double or even triple by that point. We're also seeing flagship storage devices like the Western Digital Black 8 terabyte drive going for over $2,500. That's more than the cost of a high-end PC. And Micron has reportedly started pulling back on customer-facing products such as Crucial, that is mainly to focus on their high demand and high margin for AI data centers. And now if you're thinking that you don't really care about these memories because you have a laptop or a PC that's already built and think you'll be fine, well, it's also hitting Nintendo and phone manufacturers. We're seeing reports from Bloomberg and supply chain companies suggesting that Nintendo is under massive pressure to hike the price of the Switch 2. Nintendo's president recently admitted that the memory prices are rising at a pace exceeding expectation. For a company like Nintendo that relies on being affordable and a family option, this is a real crisis. They can't absorb these 200% increases on storage and RAM. If they keep these prices low, they'll start losing money on every console they start selling and putting their core audience at risk. And supposedly there are rumors out there that they're about to start raising the prices from around $50 to $100 per device to just cover up these costs that the chips have made up. And Fission's CEO, K.S. Paul, recently warned that there might be a massive die-off of smaller consumer electronics companies this year. Because if you aren't giants like Apple or Samsung, you don't have the leverage to secure these long-term deals. Small companies that make routers, home gadgets, and budget tables are literally being told they cannot buy these chips anymore because they've already been sold to a bigger company. This is going to leave us with fewer choices over the year and not as much innovation as we expected just because there's so few chips now available. So what should you do about it? Well, you can't really do anything. Only if you see a decently priced sale on any storage or RAM. If you really need it, you could buy it. Otherwise, you will end up having to spare some memory by deleting old games off of your computer or your phone. And this leads us to the AI infinite money. You might be feeling like you're reliving the same thing over the past few months because we've reached a point where the AI boom is starting to feel even more like a circular trend. And the biggest news isn't just a product launch, it's a financial loop. It's a $1 billion reciprocal investment, virtual open source takeover, and believe it or not, AI boost for companies that make toilets. NVIDIA, the company that basically owns the materials for the AI rush, is reportedly finalizing its $30 billion investment into OpenAI. And if you think about it, OpenAI is one of the OpenAI is one of Nvidia's largest customers. They're buying billions of dollars worth of chips to train their models. And now Nvidia is essentially giving OpenAI the money to buy more Nvidia chips. Critics are calling it a circular capital. If Nvidia invests in its own customers, it ensures their order books stay full, which keep their stock price high, which gives them more money to invest back into that company. And if you can see where this is going, it's basically at the end of its closed loop and it's worth trillions. While money is circulating at the top, the software is having also its moment. You've probably seen the name OpenClaw, or previously known as ClaudeBot, all over your feed. This started as a project by Peter Steinberg, a tool that didn't just chat with you, but actually took over your desktop and did some actual work on it. It could book your flights, clean your inbox, and manage your spreadsheet. It was so effective that Anthropic's legal team reportedly panicked, forcing a rebrand from Claude to OpenClaw. But recently, Sam Altman didn't just want to watch from the sideline. OpenAI just hired Steinberg and brought the OpenClaw project under OpenAI's sponsored foundation. By absorbing the most viral open source agent in history, OpenAI is pivoting from chat to action AI models. If you thought chat was useful before, wait until you can actually make it do things on your computer. And one of the funniest AI stories comes from Toto. It's the famous Japanese company that makes toilets and bidets. They also popularized that. Their stock price surged 11% and is one of the biggest jumps in the past 5 years. And it's not because they had a new toilet seat designed, but because of the porcelain they manufacture. It turns out that the most advanced ceramic experts used to make that ultra smooth toilet seat is needed for electronic chucks. These are ceramic platforms that hold silicon wafers during the placement of chip making. As demand for the AI chips, companies like Samsung are dependent on these tools. Toto's ceramic tool making now accounts for half of its operating profit. The AI bubble isn't just waiting to pop, it just keeps cycling its own money. Moving on to our next story is the 100-year bet. If you think about it, can you remember how long Google has existed for? And how long do you think it will continue to exist for? Do you think Google will make it in 10, 50 years? Well, Alphabet, the parent company of Google, is saying that it would outlast over 100 years because they started issuing 100-year bonds. They're asking investors to lend them money and get paid back until the year 2126. It's called a century bond, which is an ultra rare financial instrument usually reserved for governments and massive, like big companies. Alphabet isn't just doing this to show off the prestige. They're doing it because they need to fund a $185 billion AI war. To understand why people are nervous about this, you have to look at the history of the Century Bond, which is a graveyard of these giant former companies. Back in 1997, Motorola issued a 100-year bond. At the time, they were the king of the cell phone world. Today, they're a fraction of what they used to be. They've been sold and divided up over the past few decades. They still have to pay interest on that bond that expires until 2097. That value has already diminished from then. And then there's JCPenney that also issued the same bond in 1997. And 23 years later, they went bankrupt. And that was it. The reason investors are actually buying this bond is because of Alphabet's secret weapon. YouTube. Unlike the hardware companies of the 90s, Alphabet is a digital company. As of 2026, YouTube has officially been the number one streaming platform for 3 consecutive years, even beating out Netflix. Because YouTube isn't just a website, it's infrastructure. With over 2.8 billion monthly users and a creator economy that Alphabet only pays after it makes its own money, makes it an unstoppable revenue machine. Even as AI changes how we search and consume content, creators like MrBeast and other big YouTubers don't slow down. This steady cash flow that gives Alphabet an unbeatable status. Investors aren't betting on Google search. They're betting on the fact that 100 years from now, humans will still be consuming content created by other humans or AI on these platforms. So, what are they doing with the money? Alphabet's 2026 capital expenditures are expected to hit a staggering $185 billion. They're doubling their capacity for their data centers every 6 months to keep up with the demand of their model Gemini and their Willow quantum processors. By locking in a 6% interest over the next 100 years, Alphabet is protecting itself against future inflation. If the dollar loses value or sterling loses value over the next century, that debt actually becomes cheaper to pay back. They're essentially front loading the cost of this AI revolution and letting future generations worry about that bill, which is a pretty bold move that signals they intend to own the operating system for the next century. When the bond matures in 2126, most of us might not be there, but our grandchildren will see if Google survived this AI war. Alphabet is the first tech company since 1997 to try this, and they're betting on their innovation in AI, quantum computing, and their other platforms to see if everyone would trust them for the next 100 years. Our next story starts with two of the most dominant companies you have heard since you were a kid, and it finally changed. For the first time in history, the retail crown changed from Walmart to Amazon. Amazon has officially dethroned Walmart as the largest company by revenue in the world. Walmart had a 13-year winning streak. They were the company for selling stuff, but Jeff Bezos and Andy Jassy just pulled it off. However, if you look at Amazon stock, you don't see any green on that news. It's all been red. So why did Amazon's stock price drop instead of go up when this news came out? First, the history. In 2025 and 2026, Amazon pulled in a cool $716.9 billion in revenue. That barely edged out Walmart's $713.2 billion in revenue. This is more than just a number. It's to put this in perspective, in 2010, Walmart was 12 times bigger than Amazon. It only took 16 years of aggressive profit burning, but Amazon literally now became the store to buy everything. Amazon's growth was fueled by a 24% surge in AWS, which is their cloud services, a massive 100 million person same day delivery network. But while Amazon is winning at the top in terms of revenue, they are still bleeding cash. So why is the stock down nearly 10% since the announcement? It's because Amazon announced a projected capital expenditure of $200 billion for just 2026 alone. They see Amazon dumping hundreds of billions of dollars into AI chips, data centers, and these Project Kuiper satellites. And now the investors are asking, when will they get paid for it? Amazon's free cash flow, the actual cash that hits their little piggy bank, plunged from 38 billion to now $11 billion in the past year. For a company that's the world's largest, basically everything retail, having the cash reserves shrink by nearly 70% is a bad sign for investors. And there's another reason why the stock was pretty wobbly, the grocery wall. Yeah, Amazon has more revenue, but a huge chunk of it just comes from its web services and third party fees. When it comes to pure retail, the stuff you actually eat and use every day, Walmart still is the top company for it. It controls 21% of the US grocery market, while Amazon, even combined with Whole Foods, is stuck at a measly 1.6%. And Walmart's revenue is sticky, meaning that people have to buy eggs and milk, while Amazon's primary revenue is discretionary. If the economy dips, people stop buying things on Amazon, whether it be memory, computer, random knickknacks that you just find on there that you need to have. Wall Street sees Walmart as a safe harbor and Amazon as a high stakes AI gambler now. So is Amazon in trouble? Well, probably not, or not really. They're building the infrastructure for the next 50 years. And they are those companies that buy those Toto ceramic tools and NVIDIA chips we mentioned earlier. But for the average investor, seeing a company spend $200 billion on a single year while missing their earnings target is enough to trigger a sell off in the short term. And that's why they're currently losing investor confidence. But in the end, Amazon has shown pretty massive growth over the years, so it might just be a short term thing. Our next story is about aliens, which ties into the technology section, kinda. While we've been talking about these shortages, these AI booms, and these bonds, the President of the United States officially directed the Department of War to begin identifying and releasing government files related to UFOs, UAPs, and quote unquote alien life. This isn't just another campaign to just get this news riled up. He signed an executive order that has the intelligence community scrambling and the public reaching out for tinfoil hats. But why now? It actually all started with a lightning round of questions aimed towards former President Barack Obama that went viral a few days ago when he told a podcaster that aliens are real. Though later he tried to walk back on it, tried to argue that statistically probability of alien life being out there is true. And that's what he meant by aliens. And that was basically what most people believe is damage control. And the current president accused Obama of revealing classified information. And apparently the president is trying to be a hero by getting Obama out of trouble by simply declassifying everything, by ordering the Pentagon to open up the books. And as on this channel we follow the money, you'll see that Wall Street still takes aliens very seriously, because on February 5th, a new ETF launched under the ticker UFOD, and investors aren't necessarily betting on a couple little aliens, they're betting on procurement. If the US government admits there are unidentified anomalous phenomena, UAPs, in our airspace that aren't tracked, this means that radar, satellites, and sensor systems in the US are worthless and useless. We're talking about multi-billion dollar, even trillion dollar refits of these satellites. Companies like Lockheed Martin, Northrop Grumman, and Palantir are the real UFO stocks. To track these things moving at hypersonic speed without sonic booms, we need a new kind of AI model that will basically help detect these UFOs, UAPs on airspace. So the Space Force isn't just a meme anymore. It might be coming to real life. Whether we're getting high resolution footage of saucers or some more grainy footage of a Tic Tac flying in space, these disclosures will bring one thing, and the topic of more this week's episode of information, because we're seeing shortages of memory, 100-year bond, and the idea that universal life is out there and being held by the government. So thank you for listening, and stay tuned till next week for another weekly update on the news. Thank you.